welcome. This is Kieran from Crypto Bros. Really happy to have you here with me today. First and foremost, I hope you've had an exceptional week until now. If you're a regular of the channel, welcome back. If you're new, then I'd appreciate if you smash that subscribe button and click the notification bell. It helps me out a lot, especially if you like these type of videos. I bring them out as often as I can. I try daily, and yeah, let's get started. I've got some interesting information news for you today. Looking at the global market cap, looking at BTC/USD next support and price levels, maybe bringing some ideas at what caused the last cryptocurrency dump on BTC. Looking at the Chinese Ponzi scheme, maybe that's a reason. Looking at the yield curve, Hong Kong bank run, Wright faking some messages, and last but not least, I've got a fun article about the shitcoin index. So let's get started. First and foremost, the cryptocurrency market is pretty red. We've got red across the board, with a few players doing actually not too bad in the market at the moment in terms of price action. So most cryptocurrencies have had a pretty bad week so far, with double digits in the red. So Bitcoin at minus 13%, Ethereum minus 16%, XRP minus 14%, which is mostly due to the sell-off that happened in the last 2 to 3 days. Now, Bitcoin Cash is not doing too bad. It's only minus 5%. And we've also got a few other actors are not doing too bad. But we've got a few that's got, for example, Tron minus 20%. That's pretty bad in the market. Now, the global market cap is also pretty low, which makes sense. We've gone from a 308 billion market cap on the 6th of August. We went down to 262 billion. Now let's see if we we've actually broken below the last low of 263 billion. So let's see if we're going to bounce and go higher. We're going to have to look at the BTC/USD to see which are our next support and resistance levels, to see if the price might go a little bit up or down. But I try and look at the 4-hour or the daily charts, because I prefer those as they've got less noise. I don't like the intraday charts too much. But I think, in my opinion, we're going to be looking at a test of the resistance line, which is this blue line here. And I believe we're going to be retesting this resistance line here at the 10,462 US dollar mark. And then we're going to have to look if we've got enough volume to break past that and maybe touch the next resistance, which would be the lower part of this cloud. And that would be at the around 10,700 US dollar mark. Now, the thing is, should we manage to close above this, then that would be a very good sign of maybe going to higher levels and bouncing back. However, should we not manage to hold, should we bounce off of this resistance here at the 10,479 US dollar mark, then it's possible that we see again another retest of lows around the 9,500 US dollar range. But yeah, we're going to have to see how much volume is in the market. But now the question is, what has caused this massive dump? I mean, of course, there might have been some players in the market that caused a dump here. I mean, the continuation of the dump is, of course, also due to extreme fear in the market, and maybe some stop losses that have been executed with, and also some liquidations, because many people were expecting the market to go much higher. I mean, even Goldman Sachs had their predictions for a midterm price to go out at around 14,000 US dollar mark. Now the question is, of course, did they bait people by placing that article? I think that article actually came out around this area here. I think it came around this area here, and right afterwards, when they told people to buy Bitcoin and that would reach the 14,000 US dollar mark, it crashed. So I don't know if it's like a they baited retail investors to be able to sell on them. I don't know. I mean, I guess no one will really know that. However, there's one reason that might be the cause to this dump, and that's because of a Chinese Ponzi scheme. Now, of course, no one knows for sure if that is the only reason, but that might be one of the reasons. Now, this Chinese Ponzi scheme is called Plus Token Ponzi Scheme. So on August 15th, the price of BTC approached $10,000 on a downward trend that has been going on for nearly a week. However, rather than being due to a lack of confidence by investors, there's a possible reason that it's because of a $3 billion Ponzi scheme, and that would be to blame. Now, there's one Twitter user called Dovi1, co-founder of blockchain investment company Primitive Ventures, was the first to call attention to the connection between Bitcoin's falling price and the high-profile Ponzi scheme that scammed millions of investors. So here is the tweet that she posted. As per Sir at Loomdot's request, this thread is about the ongoing sell-offs made by Plus Token, the biggest Chinese Ponzi scheme, which scammed around 70,000 BTC and 800,000 Ethereum. So she says, I mentioned it briefly in my last CoinDesk op-ed, but worth additional attention as it may cause further sell-offs. Now here are some actors from this Ponzi scheme. According to one, sell-offs generated in the aftermath of the $3 billion Plus Token scam is leading to an ongoing price depression for the entire crypto marketplace. Plus Token was the biggest Chinese Ponzi scam in history, skimming 70,000 BTC and 800,000 Ethereum from millions of investors. So it's possible that not many people in the European or US space have heard of this Ponzi scheme because it was mainly for Chinese investors. So the scheme began in 2018 following the typical Ponzi model of offering a Bitcoin wallet that would offer high yield investment returns. So similar to the BitConnect Ponzi scheme, you might remember. So membership structure was layered so that users would receive higher returns for bringing in new clients beneath them, which led to a user base totaling over 10 million users by early 2019. So a security audit firm PeckShield has done a graph analysis of the money flow from Plus Token's wallet in early July and figured out about total of 1,000 has gone into Bittrex and Huobi. So basically the sell-off has started around early July. Now the question is it finished or is this just the beginning of a sell-off? Yeah, it's pretty interesting. Here I've got the Plus Token company with the different wallets that have cryptocurrency on it, BTC and Ethereum. And here you've got one wallet that's sending the different cryptocurrencies to the Bittrex exchange, and here you've got another two wallets selling to the Huobi exchange, and here there's another wallet sending to the Huobi exchange. Now there are still more wallets that have cryptocurrency on it. We've got the BTC and Ethereum, around 800,000 Ethereum and 70,000 BTC. So it's possible that these wallets, that maybe not all actors from this Ponzi scheme have been caught, and it's possible that the sell-off continues. But this is all just, it's not for sure that the sell-off will continue, but it's a possibility. So however, the majority of funds are being moved onto exchanges in smaller batches of 50 to 100 BTC, making them difficult to track. In addition, the massive amount of Bitcoin being sold each day is leading to an impact of the market price, which can be seen in an ongoing downward trend for BTC. So maybe it just causes an avalanche in price depression. According to Van, many of the BTC addresses are started with P2SH, which commonly is known for multi-sig addresses. Most likely some people who hold the keys are not being caught, hence police can unlock the wallets. So for EOS, ETH wallet can be a different case, but so far police was not able to touch any of those wallets. So this might be one reason why that the market has been depreciating during this last week. I mean, there are other reasons possible. I don't think there are main causes, but there's been a bit of negative news concerning Coinbase being blocked by some banks and so on, but I don't think those are main reasons. It's also possible that just the whole sentiment of the market is in extreme fear, so any negativity surrounding the market will cause bigger investors to exit the market, and that just causes a cataclysm of downwards price movement. So now in more of the traditional markets, it's a quite interesting article talking about some market signals that might predict a recession that is coming. So a market signaling that a recession is due. Financial markets have flashed warning signs about the economic outlook for UK and the US. It is known in the jargon as an inverted yield curve. So it means that it is cheaper for those countries' governments to borrow for 10 years than for 2, which makes sense. So if you know that there's a financial crisis that is going to happen, it's going to be difficult for the government to get money through these bonds in the next 2 years, because people don't want to give the government money if they believe that there's going to be a financial crisis and their bond is going to be much lower. So it is an unusual development, and it often comes before a recession or at least a significant slowdown in economic growth. So Wall Street shares plunged on Wednesday as investors' concerns about a potential recession were stoked by the news. Now we've got the main US stock market indexes fell around by 2.3 and 2.6%. Meanwhile, in Europe, London's FTSE 100 slipped 1.4%, Germany's DAX 2.2%, and French CAC 40 fell by 2.1%. So what is the yield curve? Off topic to quickly explain it. So this warning sign is coming from the bond market, a place where governments and companies go to borrow money by selling bonds. A bond is a promise to make certain payments in the future, usually a large one when the bond matures. So so if it's a 2-year bond, after 2 years, after 10-year bond, after 10 years. So smaller ones in an interim, typically every 6 months. So how much investors pay for the bond determines the yield they will get. The higher the price, the lower the yield. One factor affecting the yield that investors want is how long they have to wait for the big final payment. Usually a longer wait means they expect a higher yield. Is it a reliable signal of recession when the 2-year bonds have a higher yield than 10-year bonds? So what is unusual is that the yield on UK government bonds, as they know, with 2 years to maturity, went above the 10-year equivalent. The same happened in the US. So here you've got the yield curve predicts recessions chart, difference between returns on 10 years and 1-year bonds. Now, as you can see here, we've got the dot-com bust was in 2000, and the difference was lower than zero, and here again on the 2008 crisis, and we're nearing this mean of 0, which would be a kind of a prediction that that there's an upcoming crisis in the next 2 years. Very interesting. So is the inverted yield curve reliable? So according to The Economist, all the US Federal Reserve periods with an inverted yield curve are reliably followed by an economic slowdown and most always by a recession. However, there are a few factors that could slow this down, and one of it is quantitative easing, the policy pursued by many banks after the financial crisis and before, by the case of Japan, of buying financial assets, mainly government bonds. So yeah, so this is actually making the market pretty nervous. There are also a few other macroeconomic factors that are making the markets nervous. For example, the global trade conflict is a factor for many economies. Concerns held by many through by no means all businesses and investors about the possibility of a no-deal Brexit are a UK-specific issue that may be contributing to more fear in the market. The UK has just recovered 1/4 of declining economic activity, so the idea of an imminent recession is not at all fanciful. And in the US, it would take a significant further slowdown to produce a recession. Germany has also had its problems, and it's registered 1/4 of declining activity according to a new figure, so a recession could be underway too. So yeah, in the general gist is there's an expectation that there's going to be a recession in the next 2 years, and there are many macroeconomic factors that are pointing us in that direction and are signaling that this is going to happen in the next 2 years, with many tensions and also political factors like the Brexit, the US and China trade deals that are happening. It's all pointing in one direction, and that's an imminent financial crisis, which is unfortunate, but I guess that happens every few years. Now, talking about financial crisis and political instability, Hong Kong activist leader calls for a run on Chinese banks, and prominent Hong Kong pro-independence political activist Chen Haojian has called for a run on Chinese banks, asking that everyone withdraw with their money on the same day. So Haojian is a founding member and the governor of Hong Kong National Party, arguing that large-scale protests have only led to injuries and escalating police brutality. Haojian believes that another method could be used to severely undermine China's influence, a good old-fashioned run on the banks. So he called on Friday, August 16th, that Hong Kong citizens should take out all bank deposits. The primary goal is Chinese banks, but he said that other banks should also be targeted. Otherwise, Chinese banks can borrow money from other banks to solve their problems. Hong Kong has been rocked by weeks of violent protests by pro-independence campaigners. Earlier this week, riot police stormed Hong Kong International Airport to clear them out. So I'm pretty interested to see how this plays out. And like I mentioned in one of my last videos, I've got a lot of respect for these Hong Kong pro-democracy fighters, and I hope that they manage to pull through and that this gets resolved soon. So now Bitcoin and the traditional markets. So if you're looking for underwhelming gains, you are in the right place, and you can look at the traditional markets. And I think it's pretty good to look at the traditional markets, especially when we've got such a downside in the cryptocurrency at the market. We have to always look at the big picture and see that we're actually still in a very good place when compared with the traditional markets. We get spoiled in terms of gains. If we look at the gains the last 2 years, we're still way up above different traditional assets. So for example, the gold, the legacy safe haven asset has appreciated by 18% in 2019, only 18%. I mean, of course, the risk is much lower, but the return on investment is much lower as well. That's why it's also got a much lower Sharpe ratio. So at the beginning of the year, an ounce of gold in the futures market was priced at $1,283 and currently is trading around $1,517 an ounce. So not a big appreciation, so it's around 80% year to date. So the S&P 500 stock market index, on the other hand, has gone up by roughly 13% year to date. So also nothing staggering, and the S&P 500 index has a much higher risk ratio to return on investment than gold. Dow Jones Industrial Average is also not up a lot. It's up only around 9%. And now the thing is, it's pretty fun when people bash cryptocurrencies and so on based on their risk. I like this tweet from Pompliano. Antonio Pompliano noted that the cryptocurrency could fall even further, still dramatically outperform the S&P 500, which tracks a basket of large cap stocks. So Bitcoin's price could fall 50% from today. So from 10,600 US dollars, it could fall down to 5,300 US dollars and still be outperforming the S&P 500 in 2019, which is pretty good. So however, even though Bitcoin has made impressive returns this year already, last week has been pretty dramatic, but that's nothing new for the cryptocurrency market. All right, in a bit more in the comedic sphere, we've got Bitmessage developer Craig Wright fake documents on Bitcoin creation, which is another, it's just showing how much of a victor she is. So the developer of peer-to-peer messenger Bitmessage, Jonathan Warren, testifies against Australian computer scientist Craig Wright, stating that some of Wright's documents in a recent trial were faked. So per court document released on August 13, Warren testifies in the course of an ongoing lawsuit against Wright filed by the estate of David Kleiman, who is a cybersecurity expert who many believe to have been one of the first developers buying Bitcoin and blockchain technology. So access to Bitmessage in the US Southern District of Florida, Warren confirms his role in the development of Bitmessage, also claimed that both Wright and Kleiman had access to the messaging software before its launch. So Warren testifies that printouts of the above correspondence prior to November 19, 2012 were likely forged. Speaking further about Bitmessages sent between Wright and Kleiman, Warren stated, "It tells me that some of the messages have been faked. Either date has been faked or the screenshot has been faked because Bitmessage wasn't released at that time back in October 2012. So yeah, let's see how that develops. I think we've got enough information to show that nothing that Craig Wright says can be believed to be true, especially not his statements that he's the creator of Bitcoin. So hopefully all this will blow over and no one will be talking about him in the near future. Now, last but not least, got this very interesting article about the shitcoin index. And I hope I'm not going to offend anyone if one of your coins is in this list. It's basically just an index based on the number of tweets and the trading volume for that specific coin. So here briefly, as I don't want to pull this too long, the shitcoin index, while Frank acknowledges that there are plenty of deserving projects that receive more attention from crypto Twitter than their trading volume suggests, there are also outliers that gave him the idea to see if there was any correlation between the tweet volume and the trading volume. So he states, we created a metric called hype to activity ratio, which sounds a lot better than shit index, and which measures the number of tweets each crypto has per 1 million in trading volume. Across the 450 cryptos we investigated, there was an average of 1.02 tweets per 1 million in volume. We used the 30-day averages for tweets and trading volumes, explained Frank, who examined the coins with a minimum of 50 tweets per day. So some cryptocurrencies had astronomical tweet volumes versus trading activity. As an example, Token Pay, Electronium, and Dragon Chain. Many of them we've heard a lot about because they've been hyped a lot. So here we've got a nice list with most overhyped cryptocurrencies based on trading volume. So we've got number one is Token Pay. It's got 901 tweets per 1 million in volume. Electronium, second place, Dragon Chain, Telcoin, and DigiByte. Now, the least overhyped cryptocurrencies on Twitter based on tweets by trading volume. So here we've got Tether, of course. Tether, no one's hyping Tether. With second place is EOS. Third is Ethereum Classic. It's got quite a high trading volume and no one's tweeting about it. And number 4 is Cosmo, and on the 5th place is Neo. So There's another chart here which is pretty interesting. I think you'll find interesting, and that's the most overhyped cryptocurrencies on Twitter. And here we've got many of the different cryptocurrencies laid out based on hype score. Some of the first ones we've already seen, the top 5. And we've got IOTA, Fathom, NASA Exchange, Tomochain, Ponzi X, and on the right side we've got those with the least hype volume with EOS, Ethereum Classic, Neon. Alright, Bitcoin SE, but that's probably because no one's really interested in that. We've got Tron, Bitcoin Cash, Litecoin Dash, and so on. But yeah, so if the coin's got a low trading volume and low hype score, it doesn't mean that it's automatically good. Just might mean that people are not very interested in it. But yeah, I'll link all these articles down below. If you've got any comments, if you've got any suggestions for areas that you would like me to branch out, then leave them down in the comments below. I'll gladly answer them and maybe follow through in the next videos. So hope you enjoyed this video, and I'll catch you in the next one. Peace.